in attendance, whether you're a seasoned investor or you're just getting started out, or you're just curious about the world of commodity investing generally. I'm sure there's something for you into this webinar. My name is Tolani Adewumi, and I am a part of the Wealth and Portfolio Management team at Meristem Wealth Limited. Our speaker is also a very seasoned executive in the world of commodity investing, and I'll be introducing him to us shortly. But before then, I'd like to give us a brief introduction into what we'll be talking about today. So commodities generally are physical goods like agricultural produce, metals, or oil. And much like every other investment securities, they are very relevant to the development of any global economy, or the global economy generally, rather. And they are impacted by various factors, some of which we'll be touching on today in various depths. And I am so excited and pumped to get into it. I am sure that you guys will be taking a lot away from today's webinar. A few general housekeeping before I bring in our speaker for today. We encourage you to please leave questions in the Q&A session of the webinar throughout the session. Our team members are waiting there to answer some of your questions, and whatever they don't get to, we'll be creating some time during the session or much later on during the session to go through some of those questions. And at some point during the webinar, we'll be putting out a link for feedback. We ask that you kindly participate in the feedback. It's going to be very brief, just a few seconds of your time. Thank you very much. Now to the good stuff. I'd like to introduce you to our speaker for today, the person of Yusuf Ogubi. Now, he started out his career as a research analyst at Meristem, and then went on to AFEX, where he joined Invest, where he participated in and spearheaded, a couple of big ventures, such as creating financial products around the world of commodities and commodity ecosystem generally. Some of these products were utilized to raise up to 300 billion for companies within the same space. I think that's really exciting. In 2022, he moved from the financial and product structuring part of the commodities market to the physical part of the market, where he traded with some of the biggest agricultural trading house in Nigeria. Now he's back with us as Meristem as the head of our Meristem's Commodity Solution and Trading Desk. And I am very, very excited for him to get started. Thank you so much, Yusuf, for agreeing to share your wealth of knowledge with us today. And I'd like you to start by running us through how to approach the world of commodity investing, particularly in Nigeria. What are the key drivers? What are the things that the participants in today's webinar should be paying attention to? Thank you.
Yeah, good morning, everyone, or good afternoon, good day from wherever you're joining. Can you hear me clearly? Please confirm you can hear me clearly. Okay, yes, fantastic. So thank you very much for joining us today. It promises to be a fantastic session. Commodities generally have evoked a very significant and exciting interest across board. Just yesterday when we put it out, or last week when we put it out, and yesterday when I personally put it out on LinkedIn, I've received a number of questions and inquiries into the commodities market. And I hope everybody joining today would find it as exciting as I find it as well. So just give me a second, Tolani, to share my screen so I can begin to answer your questions. Give me a second, please. Please confirm you can see my screen. Oh, fantastic. So basically, the question is, how do we think about the market? If I were a newbie to the market, I'm just joining the market, or I've been in the market for a while, how do I think about the market? And we think it's as simple as ABC, and just come along with me on this journey. Just a second. So commodities generally are classified into 4 broad classes. And to be honest, we come across commodities and utilize commodities in one way, shape, or form in our everyday life. We come across these commodities, but in the shape, in the manner that not a lot of us actually recognize that we're actually interacting with commodities. So take, for instance, commodities are broadly classified into 4 classes. The first one is soft commodities, and these are literally commodities that are put into the ground and then planted and then harvested. So your grains, your oil seeds, by grains we mean commodities like maize, paddy rice, we also mean commodities like sorghum, but then we also have other commodities like cocoa, coffee, cotton, lumber. The wood that is sold in the sawmills across the country is also a form of commodity. The second class is livestock and meat, and we have beef, milk, pork bellies, and cheese, right? So if you look at it generally, the soft commodities and the livestock and meat commodities are combined what we call the agricultural commodities. Then we move down to energy commodities, which we are very familiar with in Nigeria, given the fact that it's become a very key integral part of our mainstay of the forex reserves of the country. Energy commodities, including crude oil, as we know it, natural gas. A lot of us have heard about CNG recently, LPG, coal. Enugu State is known as the coal city. These are all energy commodities as well. Then we have what we call the metal and hard commodities, gold, aluminum, silver, palladium, copper, lithium as well, as we've come to hear of more recently. So these are all commodities, 4 broad classes, like I said: soft commodities, livestock and meat, energy commodities, and the metal and hard commodities. So let me paint a picture. You are going out with your friends to hang out. You would literally come across at least up to 10 commodities that you would interact with. So you step into the Uber, you step into the Bolt, to get to the hangout point. So the Uber or the vehicle you are getting into is literally a combination of aluminum, a combination of, if it's an electric vehicle, lithium, copper, a lot of it. If it's an internal combustion engine vehicle, you are looking at PMS, petrol that you are putting in the vehicle. So that's the first step. You yourself, you are going out, you are putting on your jewelry, you are putting on gold, you are putting on silver, you are putting on diamond. These are all commodities as well. The dress you are putting on is cotton for a larger part. And then you get to the location where you've placed your order and you're ordering rice and chicken, for instance, and then a can of Amstel Malta or Malta Guinness. So the rice that you're eating is another commodity. The chicken you are eating is actually being fed mostly by maize and soybeans. And then the Malta Guinness you are drinking is actually coming from sorghum, mostly malted sorghum. That's what we use to produce Malta Guinness mostly in the country. So, and that tells you how much interaction we have with these commodities on a day-to-day basis. So having known the kind of commodities we have and the broad classes that we have, how do you then think about the market? If you wanted to analyze the market, if you wanted to have a sense of where the market is going, how do you do that? So there are 4 key drivers for the commodities market, and they are broken down into primary and secondary drivers. On the primary drivers, you have what we call the demand supply fundamentals. That is the most important, the most basic element for commodity pricing and price analysis globally. Whether you are thinking about commodities in Nigeria, or you are thinking about commodities in Ghana or in the United States or China, it's the same thing: demand supply fundamentals. And how does demand supply fundamentals, what do they mean? It's literally the demand that you have as a household and the demand that is aggregated at the industry. So all the companies processing commodities in the country combine, the household and the industrial demand combined make up the demand part of the demand supply fundamentals. And on the supply side, you have what we call the production in the country, the imports that are brought into the country, what we call inventory carryovers as well, which is the production brought forward from last year. So take, for instance, in 2023, we have 100,000 metric tons of maize remaining in the country. At the beginning of 2024, what we then have is 100,000 brought from 2023 into 2024. So that's the demand supply fundamentals. And what do you get to see? So you are either in a net deficit situation, in which case the demand is more than the supply. you are in a net surplus situation, in which case the supply is more than the demand, or you are in a balanced system where the demand and supply balances. And what we know, when demand is more than supply, prices go up. When supply is more than demand, prices typically tend to go down. When they are balanced, you typically get to have flat prices across board. And that's what you have. The second driver that we're looking at here is the climatic conditions. Literally because all the agricultural commodities that we trade are influenced one way or the other by the weather. Primarily, agriculture is dependent on the weather. The second thing is even the hard energy commodities as well as the metal and hard commodities are still influenced by weather, because human interactions, human activities generally are influenced by the weather. When there is a storm, you can't go to the production region. When there's heat wave, you have to stay in one location and manage your production. So they typically affect production generally. The third thing is also macros. Macros are on this, and that's on the secondary driver side. Just to go back to the climatic conditions, one other way weather conditions also affect demand and supply or prices of commodities generally is that, if you recall, when there is too much heat, you demand for cold water. Cold water is done, you freeze your water or you refrigerate water, leveraging on electricity, whether it's from the grid, off grid, or you're using PMS to power your generators. And that's the kind of fluctuation you see in demand and supply. For macros, on the secondary driver side, you're looking at general economic conditions, key economic variables such as exchange rates, inflation, GDP, and interest rates. So these are key economic variables that happen more or less at a high level, but then they affect each and every one of us. We remember when GDP is growing, which means that the economy is doing well, generally demand also follows suit. You'll be making more money, you want to buy stuff, and you want to give out gifts and enjoy yourselves, basically. That's literally demand. And when GDP is going down, as we have it in the country currently, demand is also restricted. And that means that if you are consuming certain things before, you cut back on the consumption of those items in order to manage your expenses. The same thing applies when inflation is happening, exchange rates when they are going up, interest rates when they are going up. So all of these things are key macroeconomic variables that affect general price levels of commodities. The last one, but not the least, is government policies. Government policies are important because, like we say, they can make or mar businesses. Whether you're talking about trade policies are policies that relate to imports or export of a particular item. So when the government is saying there's an import ban on an item, or there's an export ban on an item, that's trade policy. When the government is implementing fiscal policies, so policies that relate to the revenues of the government, taxes and the like. So these are all policies that apply to the commodities market as well, government policies to be more precise. Like I said, these are the broad cachet of drivers that move the market in the commodities space. Just a bit of more details. So on the demand supply fundamental side, you have sources of demand as industrial and household demand. Sources of supply, you have domestic production, imports, and inventory carryovers. Don't forget I described what inventory carryovers are earlier. The second one is key climatic weather conditions, rainfall, temperature, disasters such as hurricanes, storms, and the likes. You also have drought situations, dry spells, as we may have it. The third one is macroeconomic variables, or in short term, we call them macros: exchange rates, inflation, GDP, interest rates, trade balance, and all of those kind of economic variables. And then policies, trade policies, whether they relate to import ban, export bans, restrictions, border closure, trade block policy, and all of these things are part of the policies that we typically see in the driving commodity prices. So if you want to think about, so just snipe this slide as you can see, and you want to think about the market, this is all you literally need to think about the market. Tolani, I hope that answers your question.
Certainly does. Thank you so much for that. What I hear you say, Yusuf, is that the things that we encounter daily in our day-to-day activities are not just stuffs, they're actually commodities. And in fact, we can invest in them. They are traded. I also did hear you say one of the other major takeaways for me really is that much like any other class of investment security, they are affected by policies and macroeconomic indices as well. So that's exciting. I'd like you to talk a little bit more to why people should participate in commodities investing anyways. Like what do we stand to gain? What's the benefit? Why don't we just stick to what we know? Why should we extend our investment into commodities? What do we stand to gain?
Yeah, and that's fantastic. I wouldn't expect anybody to come onto this webinar without having a sense of what they stand to gain. And let's just say a few things about the benefits. Broadly, commodities are classified under the alternative investment class. So you have your conventional investment class and then alternative investment class. In the conventional investment class, you have your equities and fixed income, publicly known, generally known rather. And then you have the alternative investment class, you have real estate, you have private equity, and you also have commodities in that class. And the expectation is that commodities generally offer, especially in Nigeria, given the analysis we've done over time and the experience we've gathered, commodities offer four key benefits. The first one is diversification. So diversification, like we all know as investors or prospective investors, diversification is a key part of our thinking, a key principle that we leverage. So it's just like me saying, like, in more colloquial sense, I'm having a side hustle, more or less. You are investing in equities, you are investing in fixed income. You also want to have some commodities in your portfolio so that you balance the portfolio and you'll be able to generate returns across all asset classes. So commodities offer you that particular benefit. The second thing is that commodities offer you some form of inflation hedge, especially in Nigeria. If you look at the inflation basket, commodities occupy about 51%. Food inflation is 51% of the total inflation basket. So you then look at the component of food prices. You are looking at the same maize, soybeans, all of these things. They are the components of the food baskets, right? And then you add on top of that, you add energy commodities such as PMS and all the likes. So if you look at the inflation basket and you look at the composition of the inflation basket, any movement in the underlying assets in commodities in that inflation basket will literally lead to inflation. So if your inflation basket is about 51% commodities, more or less, for agricultural commodities, then you have a sense of how much relationship you have between commodities and then inflation. The third one, especially in Nigeria, is exchange rate hedge. Because the naira depreciates quite often, as we've seen. You would also expect that because there's a close relationship between inflation and then exchange rate, you see that relationship also coming out more frequently in terms of commodities. If you also recall, Nigeria is a major exporter of key commodities such as cocoa, sesame, soybeans, and a number of other commodities. And when you have those commodities in your basket or in your portfolio, you enjoy the benefits in the instance where the naira is depreciating against the USD or other currencies. You enjoy that benefit of export and the advantage that it gives you. The last one is superior returns. Generally, commodities have posted better returns than other asset classes over the last decade, over the better part of the last decade. So that gives you the opportunity to then enjoy some bit of diversification, hedge inflation and exchange rates. And while doing all of that, you're also exposing yourself to earning some superior returns in this space. Just a bit of just for the technical guys amongst us. So just a correlation analysis of the FX Commodities Index, which is the benchmark index for commodities in the country. You're looking at the FX Commodities Index as against the inflation numbers that we've seen in the country. And you have a 0.79 correlation between the two of them. Yes, they may say correlation is not causation, but then correlation tells us something as well. A 0.79 is a very high inflation according to correlation rather, according to statistics standards. And when you look at it on the exchange rate side, it's a 0.6 correlation between between ACI, FX Commodities Index, and the exchange rate, which is also a high, but not very high, but a high correlation between the two variables. So it tells us the kind of relationships we have. Like I said, commodities generally offer you diversification of your portfolio. It helps you to hedge against inflation and exchange rate, and it also gives you some elements of superior returns while also doing all of this together. So again, these are the key benefits that commodities offer investors generally operating in the space. Tolani, over to you.
Thank you, Yusuf. In essence, commodity offers us opportunity to improve return generally on our portfolio. It offers opportunity to hedge against inflation, and it also offers opportunity to hedge against exchange rate volatility as well. That sounds exciting. I would like you to now bring it home. How can our participants and our clients actually participate in commodities investing? Where do I go? Are they participating when they go to the market and ask for a bag of rice? How do they invest? What medium do they have to officially participate in commodity investing?
Yeah, and that takes us to the next segment of this presentation. So the product options. How do you then participate in the commodities market? The first question I get asked most times is, should I go to the market and go and buy a bag of maize? I'm not even sure people in Lagos can do that. You buy a bag of maize, where do you keep it? So again, it's critical that we understand how to invest in the commodity space. And I will go from 1 to 4. Please come along with me. Generally, the thinking is when investors are trying to participate in a particular asset class, you need to take them along the range of options available so that they can go from the known to the not very known along this list of options that we have here. So the first one is, there are businesses operating in the country that are publicly listed, whose businesses are focused on either the mining, extraction, processing, and marketing of certain commodities. So think of your oil and gas companies that are involved in either the extraction, the refining, or the marketing of energy commodities. Think of your agricultural commodities and some consumer goods companies on the exchange, the equity exchanges. They are focused on either the planting, harvesting, processing, and then the marketing of certain commodities as well. The popular ones that we know, we have Seplat, we have Wando, and then on the agricultural side, we have Presco, Okomo that have been on the exchange for a while. And if you look at their performance, it's especially for those that have very solid management. And of course, you can always depend on our research team to give you those kind of advice. When you look at their performance, it's usually correlated with the performance of the underlying commodity that they are operating in. So look at Okomo and Presco, for instance. Over the last 5 years, you've seen their numbers literally rally significantly, not just the share price, but the performance of the underlying business. They continue to churn out good numbers. And that's because the palm oil industry itself has continued to perform significantly well, and they've leveraged on that. So if you look at the gold prices also this year, if you look at companies that are mining gold and they are publicly listed, especially on international exchanges, you would see that their performance have been closely correlated with the performance of the underlying commodity they operate in. So that's the first option, especially for investors that are quite involved in the equity space. That's something you can quickly get information about those kind of companies, do your due diligence, do your research, and position yourself as the need be. The second one is commodities fund. So the same way we have equities fund, fixed income fund, we also have commodities fund as well. And this gives you the opportunity to invest in a fund that is held privately by an asset manager and managed professionally that participates in the commodities space. So that gives you the opportunity to say, oh, I've given somebody my money, I'm paying some fees, yes, but I expect that this person will perform professionally and deliver the returns that are kind of related to this kind of industry. The third option that we know or that we've seen is what we call the exchange traded commodities, more or less like, in quotes, your commodity ETFs. So what this offers is that these instruments are like a basket of commodities or single commodities, in fact, and listed on the exchanges that we have in a country and traded on these exchanges. Typically, they track the performance of these commodities, the underlying commodities, and they are also professionally managed. So that allows you for balancing when the managers of the commodities of the ETCs realize that, oh, these things are not performing the way we want them, they are able to balance it in a manner that continues to deliver the returns that we expect. The last one is what we call the spot commodities. And these are securitized versions of your maize, your soybeans, your gold. These are securitized versions of these commodities. And they are also available on exchanges in the country, licensed commodities exchanges in the country, and they give you exposure directly to those commodities. I see the array of options available, especially in these spot commodities, expanding significantly. And we see more participation by people, by investors in this instrument. So these are the broad four options that we see in the market. For us as Meristem, we are positioned for all of them. For the commodity-linked equity instruments, we have our Meritrade platform where investors can gain exposure to that kind of instruments. We also leverage on our research team that shares and sends reports on almost on a daily basis on these companies. If you need any particular information, you can ask, and then we would provide that. The commodity fund and the ETC are still very much work in progress. And the spot commodities are even readily available on licensed commodities exchanges in the country. The Meristem Stock Brokers Limited is a broker dealer on some of these exchanges, and you can easily gain exposure to some of these instruments. So again, these are some of the options that we have, and I think they are primed for good returns, good performance as we see it over the past few years. Over to you, Tolani.
Thank you very much. To our participant, I would like to bring to our attention that we're streaming live on YouTube. If you have friends or family members who might be interested in topic of conversation and would prefer to join via that medium, please share the link with them. And secondly, we'll be dropping the link again to a feedback, more like a feedback survey where you can leave us comments and feedbacks. And if you do require any specialized service from Meristem, that would be a good avenue for you to leave us that message. Once again, thank you, Yusuf, for bringing to our attention not just the ways that participants in this session can invest, but also how they can invest through Meristem. Because it's one thing to know that, oh, you can trade commodities or you can invest in them. It's another thing entirely to know the medium, to know where to go through. And I'm glad that you highlighted some of the ways that they can invest in that. I would like for you to say one or two things. So for instance, in analyzing investment, I think generally the people know what to consider in investing in fixed income instrument. They know what to consider investing in equities. But you already spoke to some of them earlier, but to give us more like an in-depth knowledge, like a bonus to take away from today's session, how do we approach analyzing commodities investment? What knowledge can set us apart from the people that are not on this call today?
Yeah, fantastic question, Tolani. Fantastic. And I'll do you something better, right? For those that are on this call, I'll share some snippets of our outlook that we've written proprietarily. It's internal. We've not shared it publicly. Only shared it with participants in this space for now. And the thinking is, how do you go into the coming year, more or less? The commodity season is very much at the early part of the season, and we are starting the season currently. And the question on my mind, or I would think will be on any other person's mind for now, will be, how do I think about the markets going into the coming year? So again, just a bit of numbers. If you recall, I mentioned earlier that there are four broad drivers. The first one is demand supply fundamentals. The second one is the weather conditions, climatic conditions. The third one is macros, and the last one is government policy. Now, I'm looking at demand supply. I'm looking at the weather pattern for now. So this year, and I'm focusing on the agricultural commodities for now. This year, we looked at the rainfall patterns across most of the producing regions. And then these are somewhat about 11 states that we're looking at here. And if you look at the column captured rainfall pattern, you would see that for the most part, we barely had enough rainfall in most places. For some of us, we would have experienced this and would have said, oh, why is there no rainfall? It's literally across the country. That's on the one hand. On the other hand, cost of production has also gone up. On an average, the cost of key producing inputs, when you talk about NPK, whether it's T15 or 2010 and urea, their prices have gone up by between 50 and in some cases up to 80% over the period that we are looking at. So it tells us that we can't have price levels at the same level we had them last year. That's a key. If production costs are going up, then something radical must happen for prices to be at the same level as we had them last year. So for us, in thinking about the market going into 2025, there are 4 key risk factors that we are looking at. The first one is the balance of demand and supply, which is saying that, oh, are we going to have a net deficit? Are we going to have a net surplus? Are we going to have a balanced situation? The second one is the economic trajectory. And the question is, are we going to have better economic situation, or we continue to remain in the same situation we are in now, or it even worsens? The third one is a critical sector in the commodity space is the poultry sector. And I'm not sure for many of us, but I buy a crate of egg for about 6,000 naira now. And that's as a result of the problems we've seen in the poultry sector over the last 1 year. Are we going to have an improvement in that situation? Will it remain the same or will it worsen? Those are 3 scenarios we are looking at. The last risk factor we are looking at is the Naira USD exchange rates, as well as the Naira CFA exchange rates. Oh, let me just mention this. The bulk of the countries that are neighboring countries to Nigeria, when you talk of Benin, Togo, then you go to Burkina Faso, they spend what we call the West African CFA. And that's a key exchange rate that we also track, the Naira CFA exchange rate as well as the Naira USD exchange rate. So will the Naira appreciate against these 2 currencies or other baskets of currencies, or will it remain at the current levels, or will it depreciate further? So these 3 scenarios, the base case scenario, in which case everything remains the status quo, the best case scenario, in which case everything improves, and the worst case scenario, in which case everything deteriorates. These are the 3 scenarios we are watching out for. Now, what do these scenarios say? The probability of the best case scenario as we have it is about 25%. And that scenario would have an excess supply of commodities, economic conditions would improve, the poultry sector would experience a resurgence, and a number of farms that have closed down would reopen, and the Naira will appreciate against a basket of currencies. We think there's a 25% chance of that happening. The base case scenario, which means that you would have a balanced system, which means commodities would more or less be static, not too much, not so much shortfall, not so much excess. The current status quo around inflation, it's slowing down. That would remain. Slow but positive GDP as we have it would also remain. The current situation in the poultry sector would persist. That means that, yes, we'll not have further closure of poultry farms, but also we may not have openings of other poultry farms as well. It will remain static. And the Naira USD, Naira CFA levels will remain at the current level they are. In the worst case scenario, we expect a net deficit in supply of commodities. We expect that the economic environment will deteriorate a bit further, which we call some form of demand destruction. We see that the poultry farms will continue to close down further. And then Naira USD rates may go as high as 2001. It's currently at 1750 range. And then for the CFA, it's currently at 2.8. We see it hitting 2.9. So for the CFA, we are literally 0.1 from hitting our own target. Now, what I want you to take away from here is that the best case scenario has a 25% chance of happening. if you flip that statement, the counterfactual is that there's a 75% chance of the best case scenario not happening. And that's something that we need to also pay attention to. So that means there's a likelihood that the base case remains at 40%, which is what we think is very likely to happen. And then there's a probability of 35% of the worst case scenario happening. In any of these situations, we still see commodity prices notching up about 20 to 25% gains for the year. May not be spectacular, but then that's what we think. In the best case scenario, that's what we think will happen. In the worst case scenario, we think it may go up to about 40% price increase over the course of the year. For some commodities, it may go further than that, but that's what we think on the average. So again, this is what we are looking at in terms of scenarios. In terms of scenarios, the most important thing is the best case has a 25% chance of happening and a 75% chance of not happening, which is something that I think is important to note. So for us, this is what we are thinking. I think since we've not put this out publicly, for those that have joined, about the 306 people that have joined this webinar would be able to take this away and enjoy some exposure and advantage on the back of that. So thank you very much, Tolani. I hope I've been able to answer your question. Thank you very much. Over to you, Tolani.
You certainly did. And then you also gave us takeaways. So we appreciate that. Thank you. And I already see a lot of exciting questions in the Q&A section, and I cannot wait for us to get into that. But I have one last question for you, Yusuf, before we move on to question and answers. You mentioned as part of the ways that investors and market participants can invest in commodities, you mentioned funds and ETFs. And you did brief us on the fact that Meristem is in that space, right? Tell us a little bit more about that. How can client assess those investment opportunities through Meristem? When, where, how? Simply, how can Meristem's client or people on this call today assess the opportunity to invest, particularly talking on commodities funds and exchange traded commodities, where, the how, and the when?
So I'll start with the where. So for us in Meristem, the goal is to help you grow your wealth and also transfer it to the next generation. If you had joined this webinar early, you would have listened to one of our videos that was talking about wealth transfer to other generations. So the goal is to be able to provide you the array of options that will allow you to do that. And commodities is also one of those things. The goal is to provide this commodities fund and the ETC. And why is that? Because we recognize that we have a group of investors that are classified at various risk levels and various exposure levels to the commodities class. So for some of them, for some investors, they'll be able to go on their own, leveraging on our research, buy into the equities or buy into the spot commodities themselves. But we also know that there are some investors that would like us to manage those kind of exposures for them. So that's why we are developing the commodities fund, which is privately held, more or less like our money market fund, which is about top 2, top 3 in the market currently. So you are able to then gain exposure to that kind of opportunity. The commodities fund allows you to participate in the commodities market with somebody managing that fund for you. The same with the ETCs as well. For the ETCs, we are currently in the process of working on the ETC and releasing one. Very likely, I'm careful not to give a timeline here so that because it involves some form of regulators approval, but we are working very closely with the exchanges and the regulators to ensure that we are able to deliver on this instrument as soon as possible. Worst case scenario, we are looking at January, God help us, January to deliver on that instrument. The commodity fund will take a little bit further, a little bit of work to deliver on that. We're looking at Q1 or early Q2 2025 to deliver on the commodities fund. But the ETC is right at the snap of your fingers. We should be able to deliver that as quickly as possible so that investors that would not be able to take the positions themselves can still benefit from this from this important asset class.
Thank you for that feedback. In essence, Maritime is working on two avenues for clients and participants here today to participate in commodities investing. The exchange trade commodities fund, and then the mutual fund, more like a mutual fund, but a commodities fund. Is that correct?
Yeah, very correct.
And if any of us on this call need more details on specifics, please go to the form. We've placed the link in the chat box or in the webinar chat. It's easily accessible. It's very quick. You can leave details there. You can leave your email and we'll reach back out to you. There are also people answering questions in the Q&A session, and they are waiting there for your questions. Some of those will be taken live because I've seen a couple of exciting questions and I can't wait for us to get into it. Again, Yusuf, I would like to thank you. That was such an insightful session. I am giving us a lot to take away with us and think about. I would like for us to go on to the question and answer session. I hope you're ready for that, because I've noted a few exciting ones. Yusuf, are you ready?
Absolutely.
Perfect. There are a couple of questions on risks and risk management, right? So I've seen a few, but it all borders around talk a little bit on what risks are involved in equity investing and how to mitigate that risks. And I think that goes side and side with other questions that I've seen about regulatory authorities and how they help mitigate those risks and the liquidity of commodities as part of the risks. So that's kind of like a 3 or 4 in 1 questions. What are the risks associated? Please discuss liquidity risks as one of those risks associated. What are the regulatory bodies and how they help you manage these risks? And lastly, how do we investors adequately manage the risks involved?
So first of all, I must say that the Securities and Exchange Commission is the regulator for the commodities market, literally. There are about 5 licensed commodities exchanges in the country, and there are a number of adjoining service providers, collateral managers, warehouse operators that are also in this space, all licensed by the Securities and Exchange Commission. Over the last 10 years, to say the least, the Securities and Exchange Commission has done quite a lot to release guidelines, release procedures for various instruments in the market. They've approved a number of instruments in the market, including the ones I've mentioned here. And they've provided a lot of information for us to work with. Basically, what I'm saying is every participant that you would be dealing with in this space is licensed by the Securities and Exchange Commission. That's the first thing. And that's the same regulator that oversees the equities market, the fixed income market, as we have it in the country. The next thing that I would also like to mention with regard to the risks levels that we see is that the first risk that you would typically be exposed to as an investor is the price risk. You are taking position in a particular commodity and you are hopeful that the asset prices would appreciate, capital gains basically. And that's supported on the back of, just like you do in the equity investment, you do your due diligence, there's the research that you ask for, there's the research that you work with, and on the back of that, you take your positions, right? That is what drives the decisions that investors take in the commodity space. There are also some back-end risks such as logistics risk, warehouse risk, but because the Securities and Exchange Commission has done a great deal of work in providing guidelines, so you have comprehensive insurance on the warehouses, civil and commotion insurance on these warehouses as well. Literally, a lot of insurance providers in the country are very well aware of this kind of risks, and they've been insuring for years and years. So this is not something that is new to them. For some of the people that are involved in logistics in the commodity space, there's something we call the goods in transit insurance. Again, the insurers in the country are very well accustomed with all of this type of risk, and they've been covering them for decades, not even now. So we have those risks covered. The liquidity risk is a risk that, in terms of the market evolving, it's one of those risks that we continue to provide solutions for. In terms of participants being present on in the market, participating on exchanges generally, which is why we, from our own angle, we've provided an array of options, not just one options, not just one option. So that means that investors review the liquidity risk in some of these instruments, and they're like, oh, I don't want to take this particular liquidity risk. I'd rather go for another instrument that is probably managed by a professional party that has a lower liquidity risk or pretty much no liquidity risk, in fact, and then I can take my position and exit my position easily. The same thing applies for the commodity instruments. Of course, you've seen the participation on the exchanges, and it's still very much in its very early days in that regard. So we are pretty much looking at a market that is still evolving. The South African market is something that we all also look forward to attaining its level of development. Trades about 15-1. So the exchanges in South Africa, the commodity exchanges in South Africa, trade 15 times the volume of the volumes produced in the country. So it's a very highly liquid market, and investors are basically coming in and out of the market and gaining exposure to the markets. And that's what we see for now. So liquidity risk is literally something that is minimal in this space. If an investor is not comfortable with a particular option, you choose the other option, and then you benefit of the array of options that we've put forward.
Thank
Yeah,
you.
I hope that answers that question, Tolan.
Yes, it certainly does. It does. Thank you so much for that. Another common question that we have in the chat box is, where will ETF be listed? Oh, yes.
Are working with FX Commodities Exchange, as we have it on licensed by the Securities and Exchange Commission. That's the exchange we're working with now on that particular front. Also know trying to license the country. So with Lagos Commodities Exchange and a number of other ones that are licensed by the Securities and Exchange Commission in the country. Of course, we would review the performance of the exchange, and we would be able to determine whether we would go onto those exchanges and introduce instruments on those exchanges as well. Yeah, that's what we have currently.
Thank you very much. So basically, we're working with exchanges that are already licensed to trade. Can Meristem's client that already have Meritrade access this exchange via Meritrade, or what kind of collaboration would exist between Meritrade and these other exchanges?
Yeah, it's the relationship between MSBL, which is what we are working on backend currently, is to have a direct integration with FX Commodities Exchange or any other exchange that we are working with, such that when you pick up your Meritrade, you can trade your equities and trade your commodities as well. That's what we're working on currently. The that integration, and we're able to leverage platform Africa Exchange.com as we have it currently. Find the community of Meristem Stockbrokers Limited, and you enjoy all the benefits of being part of the community. Meristem Stockbrokers Limited would also do all what they do for you on the equity side, providing you research reports on the commodities that are available, and you can trade through Meristem Stockbrokers Limited on the exchange. So while we are working on the integration on the system end, we are already on the platform, the exchange platform itself, on africaexchange.com, using Meristem Stockbrokers Limited as a community. We're already there, positioned as well to provide investors the opportunities and the support they need as well.
Thank you very much for that. And that's one thing that's exciting about being a part of the Meristem family. We're a group and we have, different subsidiaries that kind of shakes hands to deliver a holistic investment opportunity to our clients. So I did like that you mentioned that, we have people and we have various subsidiaries that kind of play into this. I think that's a very, very important thing to highlight. We are more like a one-stop shop for investment opportunities. So that bit is great. Centralizes everything for you. I have a couple of questions here, Yusuf, that does speak to how Meristem help to assess the spot market, and B, similar to that is how do the Meristem Commodity Solution Desk how do you shake hands with people that say have contracts to deliver commodities to organizations or companies and such? How do we come into play in that situation? Can we help people assess the spot market, first of all? And second of all, can we work hand in hand with people that are looking to procure commodities for other companies or organizations?
So fantastic question, and a part of me was expecting that question to come up. So for the sports commodities, like I said, it's available on africaexchange.com. You can leverage on the community that we've provided through Meristem Stockbrokers Limited. Of course, you can be sure that the level of diligence, due diligence, and commitment that we provide on the equity side would also be provided here. So that's a form of assurance. In addition to that, to answer the second question, so that's why we call it a commodities solutions desk. Not just a commodities trading desk. It's a solutions desk. And if you have those kind of engagement, we can work together to see how you can achieve your objectives, right? So it's a solutions desk, and we like to look at it from that angle. So again, we are very much open, just like Tolani mentioned earlier. Please feel free to fill this feedback form and then let us know what you would like, and then we'll take it up from there.
Thank you very much for that feedback. There's also one or two questions about consultancy. How do we consult for other players in the space, right? So I suppose this person is coming in from not somebody who is curious or new, who is already in the space. I wonder if we consult with current market players and how they can access that service.
Yeah. Again, it's a solutions desk, right? And the solutions you need would vary. So again, feel free, give us your feedback, and then we'll take it up from there. It's a solutions desk. I'm emphasizing that because I know a number of these requests, some of them will be bespoke and customized. So you can feel free to reach out to us. We can provide these solutions. I must add that given the engagements we've been having with participants across board, we are not limiting this to the agricultural commodities segment alone. So we are actually expanding the cover of the desk to also support people operating in the solid mineral space, which is also an emerging market in the country in terms of pricing, benchmarking against international standards, and in the energy space as well, which is quite advanced. And we're able to support participants operating in that space as well.
Thank you very much. I have one last question. I see that there are a lot of attempts by our team members, other commodities traders, the research team in responding to some of our clients' questions. So a lot of them have been answered already. So if you did leave a question, please check the answer section of the Q&A. You would see that it probably already left answers there for you. Thank you very much to the team working behind the scene to respond to our clients' inquiries. Yusuf, I have one last question for you before we take our closing remark. And I'd like to, again, take a minute to appreciate everybody for sticking sticking with us to this point. We're very grateful for having your attention. Yusuf, there's a question here that is asking how does returns in commodity, I think, correlates with other traditional asset class, such as stocks and bonds, and the implication in generally including it in your investment portfolio. I recall at the start of this session, you did mention, some of the general benefit of including commodities in your investment portfolio. But this person is asking particularly how the returns correlates with all these other traditional asset class, and looking at your portfolio, having commodities alongside bonds and equity. What's the benefit of that?
Hello, can you hear me, Tolani?
Yes, we can. Did you get the question?
Yeah, I did. So first of all, I think the question is trying to understand the principle of diversification. So is there any correlation between commodities and equities, for instance, commodities and fixed income, or commodities and real estate? From the research we've done, and honestly, given this question, I think it behoves on us to probably release a white paper in conjunction with the research team to more or less share this information more broadly. So I'm adding that to a form of takeaway that we'll be sharing with the public going forward. But then what we have seen so far is there's a very, very, very low correlation between any of these asset classes and the commodities market. There's a very low correlation. The last time I ran the analysis myself, I think there was a 0.2 or 0.17 correlation between equities and commodities. That tells you that there is no relationship. Equities move independent of the commodities market. They are separate markets in and of themselves. And one of the interesting things that we have now is that we have historical data going back as far as 2016, which is almost 8 years data, that we can use to run daily analysis on both equity prices versus commodities prices, and we can always share that with the public. But the principle of diversification has also been clearly confirmed in Nigeria, given the commodities that we have, and we are able to say boldly and convincingly that the correlation is quite low, very low, almost insignificant for these instruments, commodities versus fixed income, commodities versus equities. There's no relationship at all between them. Or there's a very insignificant relationship, to say the least, between them. So you can be so the principle of diversification is basically confirmed as well.
I was going to say that although that question was a technical question, I wanted you to kind of break it down for people that weren't, that would like that for it to be simple. And you did that at the tail end, basically saying like, they don't head in the same direction, right? Commodities is probably doing well when something, say stock, this equities is not doing so well, or it's doing well, say when the fixed income is not doing so well. Is that a accurately my interpretation of what you just said?
Commodity does well independently. Whether it's doing well or not doesn't really affect commodities. It does its thing.
All right, perfect. Thank you very much for that. Thank you so much, Yusuf, for sharing with us your wealth of knowledge. Thank you to everybody behind the scene answering questions and making sure this webinar is running smoothly. We appreciate you all. And most importantly, thank you so much to our esteemed clients and participants in today's sessions. We're so grateful to have your attention. Thank you very much. We're streaming this on YouTube, and there'll be a recording, because I saw a couple of questions about that as well. There'll be a recording that you can watch back or share if you choose on YouTube, on our YouTube channel. So you can access this session there. We're grateful to have your attention. I would be introducing our head of research for our closing remark, the person of Praise Yanseke. Please give us a closing remark. Thank you for joining us, everybody, and happy investing.
Wow, thank you so much, Yusuf and Tolani. It's been a very, very interesting conversation. I mean, I've been taking notes and it seems like I don't even want the conversation to end. So thank you so much, Yusuf. And I do believe that everyone has gained a lot from this presentation today. It's been very, very insightful. My notes are filled up, and I'm sure every other person's notes is filled up too. So don't forget to fill the feedback form that we dropped on the chat box for people to fill. That we want to hear from you. We want to get your interest in commodities. And definitely would be reaching out to you to get some feedback from you also based on what is filled in the feedback form. We also have webinars coming up next month. This commodities webinar today is the first in the Wealth series. So we have 2 webinars coming up next month in the continuation of the commodities webinar, and also we have a webinar on the family office coming up next month too. So please do well to join us next month to continue this conversation on how to create wealth and how to increase our wealth. I mean, we need to create wealth during this period. Thank you so much for joining us. The replay will be on YouTube, and definitely you can continue to stream. You can definitely reach out to us to ask questions. We'll be there to answer you. Thank you for joining us today. Thank you, Yusuf. Thank you, Tolani. Goodbye.
Everybody.
The way to go, the top, you've come this far.
Your story doesn't have to end with you. As a matter of fact, it can continue into the next generation and the generation after that. After all, you've worked hard to get to where you are. Why should your wealth end with you? Let your story continue.
Medistam, let's grow wealth for you.
The beauty of wealth lies in growing, preserving, and transferring it. Building wealth isn't only what you do for yourself, it's what you do for generations to come. And to pull that off, you need partners. Partners who understand that the assignment isn't just to grow your wealth, but to preserve it against the harsh storms of life and ensure it sees the light of day, ready to be transferred from generation to generation. So you see, the art of building wealth is all about growth, preservation, and transfer. And at Medistam, we have perfected that art.
Medistam, let's grow wealth for you.
One crucial factor when investing in the stock market is to ensure that funds are readily available in your stock account, as time is always of essence in equity investment. Today, I'll be taking you through how to fund your account and have them reflect instantly on the Meritrade app. To fund your account, click on the deposit icon on your dashboard, input the amount, then click on the deposit icon to submit. Voila, your account will be funded. Now, there are different options on how to fund your account. You can do it through your card, bank, or transfer. Today, I'm using my card. Next, I input my card details. I'm inputting my card details. Click on Pay. And instantly, my account is funded. So for the withdrawal process, locate the withdraw icon on your dashboard and click on it. Then type in the amount you'd like to withdraw. Click on Submit, and your registered bank account will be credited.
When it comes to making great investment decisions, everyone needs a buddy. Now you have one. Introducing Wealth Buddy, the go-to app where you can save, invest, and pay your bills. Now you have a buddy to help you reach your money goals, uncover attractive investment opportunities, and make payments with the press of a button. Here's how it works. Saving on the Wealth Buddy app is super easy. First, ensure you are logged into the app on your mobile device. Then head over to your savings dashboard. Click on the plus sign to see a list of savings options to choose from. Add your goal details and start date. You can also add a photo to personalize your goal. Choose to fund your savings plan from your debit card, and then you're all set. There are several options to choose from when you invest with the Wealth Buddy app. Head over to the investment dashboard. Click on the Add Investment button. Select on the Create Investment option. Choose an investment option from the list. Read all the information, then click Invest at the bottom. Fill in the required information. You can also add a photo to personalize your investment. Choose to fund your savings from your debit card or your wallet, And then you're all set. You can also pay your bills conveniently directly from the Wealth Buddy app. Go to the wallet dashboard and select one of the bill's payment options. Pick a bill you want to pay from the drop-down. Fill the relevant details and choose to pay with either your debit card or your wallet. And just like that, you're all set. Start your journey with your new body. Download the Wealth Buddy app on all iOS and Android devices today.
Have you heard about Meritrade, the first digital stock trading platform in Nigeria by Meristem Stockbrokers Limited? You can download Meritrade from Google Play Store or Apple Store. On Meritrade, you can trade stocks that are listed on the Nigerian Exchange Limited. Worried about what stocks to trade? We have stock recommendations on the app to guide your investment decisions. Your investments are safe with us because we are regulated by the Securities and Exchange Commission. Download Meritrade today and register.
The only way to move this up, the way to go, the top. You've come this far.
Your story doesn't have to end with you. As a matter of fact, it can continue into the next generation and the generation after that. After all, you've worked hard to get to where you are. Why should your wealth end with you? Let your story continue.
Meristem, let's grow wealth for you.
The beauty of wealth lies in growing, preserving, and transferring it. Building wealth isn't only what you do for yourself, it's what you do for generations to come. And to pull that off, you need partners. Partners who understand that the assignment isn't just to grow your wealth, but to preserve it against the harsh storms of life and ensure it sees the light of day, ready to be transferred from generation to generation. So you see, the art of building wealth is all about growth, preservation, and transfer. And at Meristem, we have perfected that art.
Meristem, let's grow wealth for you.
One crucial factor when investing in the stock market is to ensure that funds are readily available in your stock account, as time is always of essence in equity investment. Today, I'll be taking you through how to fund your account and have them reflect instantly on the Meritrade app. To fund your account, click on the deposit icon on your dashboard, input the amount, then click on the deposit icon to submit. Voila, your account will be funded. Now, there are different options on how to fund your account. You can do it through your card, bank, or transfer. Today, I'm using my card. Next, I input my card details. I'm inputting my card details. Click on Pay. and instantly my account is funded. So for the withdrawal process, locate the withdraw icon on your dashboard and click on it. Then type in the amount you'd like to withdraw. Click on submit and your registered bank account will be credited.
When it comes to making great investment decisions, everyone needs a buddy. Now you have one. Introducing Wealth Buddy, the go-to app where you can save, invest, and pay your bills. Now you have a buddy to help you reach your money goals, uncover attractive investment opportunities, and make payments with the press of a button. Here's how it works. Saving on the Wealth Buddy app is super easy. First, ensure you are logged into the app on your mobile device. Then head over to your savings dashboard. Click on the plus sign to see a list of savings options to choose from. Add your goal details and start date. You can also add a photo to personalize your goal. Choose to fund your savings plan from your debit card, and then you're all set. There are several options to choose from when you invest with the Wealth Buddy app. Head over to the investment dashboard. Click on the Add Investment button. Select on the Create Investment option. Choose an investment option from the list. Read all the information, then click Invest at the bottom. Fill in the required information. You can also add a photo to personalize your investment. Choose to fund your savings from your debit card or your wallet, and then you're all set. You can also pay your bills conveniently directly from the Wealth Buddy app. Go to the wallet dashboard and select one of the bill's payment options. Pick a bill you want to pay from the drop-down. Fill the relevant details and choose to pay with either your debit card or your wallet. And just like that, you're all set. Start your journey with your new buddy. Download the Wealth Buddy app on all iOS and Android devices today.